All right, good evening, everyone. Welcome to the Hurley Investments Financial Services Commentary. I could not find a longer title than that. Today is Tuesday, May 5th, 2017, and I'm going to tickle you a little bit, tickle your interest, and see what some of you think. Out of curiosity, what do you guys think will happen in June? What do you think will happen in June? Mod thinks down. Let me go to my June. I'm looking at the S&P 500. I also think down. In fact, I think we're probably going to finish closer to, I'd probably say that 2350 level. Trump will keep twitting. The guy can't shut up. Where will we end the S&P in June? I thought we'd be down 2% in May, yet in all honesty, I'm quite surprised because we're up a 0.5% in May. S&P has gone from, in fact, this is kind of interesting. I think the S&P had 8 new highs the way that it was said. Let's go back to the S&P 500. I'm pretty sure it was 8 new highs. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. Yep. We had 8 intraday highs in May when we went from 2389 to 2413, and obviously our month is not over yet. Abraham, you don't think 33 is a date? I think it's 0530 2000. I say 33. If I did, I apologize. But we went through 8 new highs below. Gotcha. It is not a date. Thank you, Abraham. 8 new highs. Our S&P basically gained almost 1%, assuming it doesn't lose it yesterday. Lose it tomorrow, excuse me. We maybe have a 0.5% on the Dow. Yet we've had 8 new highs on the S&P 500. The reason why I'm asking, out of curiosity, can someone tell me what's happening? What's happening in our stock market right now? I planned on a 2% down in May, and it hasn't happened. We have 2 of you, Lance and Maud, melting up. Both of you said the same thing. David, optimism. I'm going to change that if you don't mind. Trumpism with a sprinkle of hope and tons of fear. With that said, obviously, VIX was yesterday down below 10 again. I'm going to go ahead and go to Maud and Lance's really quick. The melt up. I mean, I will be 100% honest with you that I'm a little frustrated in what I would have expected to happen this month. I see financials, and the reason why Soros and Hurley Investments apparently is more invested in financials than we should be. A lot of them are trading at book values. Some of them are trading below book values, where Even if Zions Bank sold everything off, they'd be worth about $42.50 a share, legitly, and they're trading back down around 39. I'm rather shocked that the understanding in the financial world is that the hope that stocks go higher, especially the financials and especially the regionals, are 100 dependent upon less regulation. It's not dependent upon a better running company. It is 100% dependent upon less regulation. If there was less regulation, you could see Bank of America double. If there was less regulation, I had a target price of $63 on Zions Bank. If we got a couple more interest rate hikes, in all honesty, that would lead to higher profits without increasing fixed costs for banks. But again, regulations, how much they have to have by way of cash and so forth, has slowed the growth. Not to mention, if I go ahead and just make my two comments here, I think banks think it's safer to put their money with the Federal Reserve and loan it to each other for 0.5% than loan it to people for 0.5%. To loan it to the Reserve pays them with basically no risk, whereas apparently loaning it to people are a higher risk. I see, by way of, especially I'll say with JP Morgan getting crushed today, I would also suggest that when the Fed talks about unwinding their balance sheet, I think they already have started. And they see how unwinding the balance sheet on some of the financials slows the growth on those individual stocks. So maybe they're sitting back going, you know what? We might have a little bit of problem unwinding the balance sheet because there are no more quote-unquote incremental buyers. Someone tell me, what is an incremental buyer? What is an incremental buyer? You'll hear this said on CNBC, Fox News says it quite a bit. Purchase stocks incrementally. Yes, but no, Roy. Yes, but no. There are a couple versions of an incremental buyer. If you had said purchase stocks regularly, there you go. If you would have said purchasing stocks like for someone who maybe has a SEP IRA and each month goes ahead and puts $1,000 into it, so it goes into an ETF or a fund, they just, hey, I've got a dollar cost average. Each month I'm going to put more money into it. I'm going to put it in the same thing. I'm going to buy the same fund, the same ETF. That is a incremental buyer. Or on a consistent basis, there you go. Abraham says it. On an incremental basis or on a more consistent basis, hey, I've got to put money to work. Here I go. I would tell you our market is more than fully valued. In fact, on a valuation metric, we are on the high end of that metric. Now, we've been there for a while. So when I say I'll be honest with you that I couldn't exactly tell you what's happening. Once again, we are in a time period where a lot of things don't add up. I enjoy doing this weekly broadcast. This webinar is where I can literally tell anyone that I'm managing money for, hey, you're going to hear from me once a week. You can still call me. You can still email me. I'll get back to you. I'm not so busy that I can't. But very interesting that I thought long and hard for the last couple days, primarily meaning Friday and today. I didn't have an answer for you on what's happening in our market. I couldn't figure out and or come up with something without literally, pardon the way I'm going to say this, but without literally being 100% full of crap and just making something up. I'm not interested in doing that. I don't ever want to be like those other people. I don't ever want to be, hey, I'm just doing this, everyone else is. I want to be someone that's doing something for a purpose. I may not always be right, but dang it, I'm looking at the market, I'm looking at positions, I'm in a lot of these same positions you are. I'm managing my own money the same way that I'm managing your money. I am, for all intents and purposes, I am 100% vested and want to know what's going on with my money like you would be with yours, because we're doing exactly the same thing. For that reason, instead of sitting here and trying to come up with some bullcrap story and literally saying, well, it's doing this and this, and trying to make something up because I feel I have to sound smart or, be better than you in some way, shape, or form, I'm not. I'm looking at this market, and if you're scratching your head, I would be sitting right next to you scratching my head. If you were to ask me, looking at a chart, I'm going to come and I'm going to tell you, you know what? We've got a quadruple or a 5 times we try to test the highs. Yes, technically we're bullish, but I would be wary of this market. If I go ahead and I go to the S&P 500, same exact thing. 1, 2, 3, 4 times we've just broken above, but we're heading down lower. And something that happened today, I was listening to CNBC. They were on the talk of saying 30 million shares were traded today with an average of 77 million. So we didn't even have half of the average volume that's traded on an individual share basis. That doesn't mean that these don't come in and out on ETFs and other funds that are created, but on a pure trading basis on the SPX, they had less than half the average volume today, and they were somewhat perplexed. We do have a NASDAQ. Nice to see technology. If you go back 3 or 4 of my webinars, I made the comment, hey, I'm going to technology. I think technology is going to move over the summer. I may have even said historically it does, when usually it moves sideways, but we're going to be in a sideways moving market. Some things aren't making sense, and our stock market valuations are some of it. With that said, so far this week, kind of a ridiculous week. Trump and Merkel. Am I spelling Merkel right? Someone tell me how to spell Merkel. Is it M-U-R? MER, I got an extra C in there. Thank you. Trump and Merkel sparring over words, trade balances, and NATO payments. I will be 100% honest with you. I thought Trump did a fabulous job on his trip. I was impressed with how Trump was as you represent the United States. As I'm impressed as how he was as a I don't know how it says. I was impressed how he was as a negotiator would be the best way that I would say it. I thought he did very well negotiating the United States positions. If you want to go ahead and take a look at some of the economic news, personal income came in at 0.4 versus an estimated 0.4. Personal spending. I always like seeing these be the same. 0.4 versus estimated 0.4. It's not correct, but when I see this, I think we make more, we spend more, which is going to help out what? If the U.S. spends more, what's going to help that out? Or what will it help out? If the U.S. public is spending more, what is that going to help out? Uh-oh, guys. I'm not on mute, am I? Not inflation. Let me give you another hint. 70% of this is dependent upon spending. What will it help out? GDP, there you go. For me, I like to see if we're making more and we're spending more, it's going to help out GDP. In which case, if we do get a 3% GDP, even though it's on track for about 2.2 right now, if we do get a 3% GDP, it makes the taxes grow up. It'll prove that less regulation is better, and we will literally be validating the budget that Trump came up with that really cuts just about everything in their uncle, which I think we're going to need. I said it back when the Mormon guy. I said it back when Mitt Romney. I thought Mitt Romney would have been really good because he would have been only a 4-year president. He would have pissed everyone off. No one's going to be happy, but I think he would have righted the ship and balanced the budget exactly like he did for the Salt Lake City Winter Olympics. He was amazing, taking an over-budgeted Winter Olympics, way over budget, trimmed the fat, pissed off everyone, yet literally had a fabulous Olympics here. I would have liked to have seen him take that type of mentality and kind of proof of the pudding that he's done in business and applied it to our government. P prices, inflation is a little bit higher, 0.2 versus 0.1. I like that because it tells me that they're not going to raise interest rates, that we'll get closer to our 2% inflation. Even though the last 3 months we've been taking steps down, I think it was 2.1 to 1.7 to 1.5. So our inflation rates are taking steps down. And then unfortunately, consumer confidence took a dip to 117.9 versus an estimated 119.5. Not important to me. Anything over 100 says we're ridiculously optimistic and that the consumer confidence is there. With that said, if I was to ask you guys, anyone here looking to make a big purchase over summer? Big trip, boat, motorhome? I've got 3 or 4 not me's. In all honesty, I'm going to stay with the toys I have too. I've got no big purchases or spending expected for myself. I kind of feel on hold. I feel like I'm on hold wondering what's going to happen in the near future in our stock market. I'm wondering if we're going to get through all the promises that were said during the campaign trail. I do have a lot going on this summer, but for all intents and purposes, no big purchases for myself this summer. Um, kind of interesting. A couple comments. I spend this month will be reflected in GDP. All of my money is going towards my crazy healthcare premium every month. There must be millions like me. I would agree. David says an interesting one. I'm not going to make a big purchase, but I may make a smaller purchase, about $1,000 to $1,500. So as you say that, uh, I am going to go to Alaska to go fishing for my mom. My mom's bucket list that is that she wants to catch an Alaska salmon. So yeah, maybe that's a good way to say it. That maybe we are still spending, but we're going to be spending on smaller items versus a big ticket item. Anyone have any idea where our markets end this week? Saying we got 3 days left. We're going to go higher. We're going to go lower. What do you expect? Think sideways. We're going to be flat. I'm going to go with lower based on the technicals. And the technicals aren't necessarily on the Dow. It's on the S&P. High to the top. We seem to have hit a ceiling. I would tell you lower. Sideways, I would believe that. And in all honesty, I could even see 2420. I can see it all over the place. On tap this week, we only have earnings really are on Thursday. Dollar General, 5, Lulu, VMware. I already forgot what PNNW was, so it's not important to me, but it is there. Economic reports, really it comes down to Friday. Average work week, non-farm payroll, private payroll, unemployment rates. What am I missing in there? Hourly earnings. But for what it's worth, based on what we've seen for GDP and the uptick, I think it's going to be okay. But I just think, unfortunately, there won't be the volume to move our markets higher. Again, I think it's like we run out of those incremental buyers. We just don't have the buying power to move our markets higher. Bit of international stuff here. Japan industrial production, China, CLP manufacturing PMIs. Really on Thursday, France and Germany's PMI manufacturing index. We'll see what kind of shape Europe is in. Sunday we have the Japan PMI and the China General Services PMI, which will run or rule our earnings going into, our futures going into Monday. As I took a look and how am I looking to trade? For some financials, and I'm just going to go ahead and put Zions Bank in there. I did a mixture of 40, 36, and 39, 36 July bear puts. Bank of America, sitting on, but looking to add short calls. The last thing I want to do is get stuck having to chase a stock higher with a short call, especially by way of financials. Visa still have 92.50 January 18 short calls for $4.60 credit, looking to roll higher on the next pullback. Apple, Baidu have short calls in July. Ford, long puts at 11. Facebook is collared. I don't remember the collared prices, but that ends through July. What's one of my, oh, Disney. Disney, 113, 115, long puts. June. So I'm just sitting in what's left over on some collar trade positions. I'll be honest with you, I am looking to sell credit for a sideways moving market, which really means bull puts, short puts, and little credit, high short calls, where I don't want to be stuck in them. Couple interesting articles. Big Techs accounts for a third of the gains in stocks on the S&P 500. 6 stocks are accounting for the big upward movement in the S&P 500. Main reason why they will keep rallying, and then I found the ups and downs of sector rotation. Very interesting article in regards to how sector rotation works. I thought it would be important for you to read this, since there have been some talks of running through a sector rotation in our stock market. And for those of you that are not sure or want some more reading on what exactly a sector rotation is, I thought this was a pretty good example of some things you could look for and read about sector rotation. With that said, what questions do you guys have? What questions do you guys have for me that I can answer for you tonight? All right. So David said, have you ever seen a market like this in the past? And yes, if you go back and look at 2006, you see a 6-month period where the S&P was up like 1.5%, and it worked within like a 2.2% range for a 6-month period of time, and then it rocketed higher. So have I seen a market like this in the past? Yes, I want to tell you it was back in 2006. And again, you'll notice a very tight sideways trading market from, March till August, and then it just took off in August. Literally went up 10%. With that said, the takeoff was again an overvalued market that kept going higher, that created a huge financial bubble. The financials have not necessarily been participating. in our upward movement. Someone made the comment earlier, David, that when the financial, no, they made the comment that because financials aren't participating, I believe they are 19% or 22% of the S&P 500. By far one of the biggest sectors in the S&P 500. So to not have them participate, that usually creates a pretty big drag. Again, rather unbelievable that our market's up, but if you read the article, there are 6 stocks that will account for 1/3 of the S&P 500 movement higher, and all of a sudden that puts things back into perspective. David, good question. So I hope that answers your question. Maud, if the financials tank, will that be enough to bring down the S&P 500? Yes. Again, it's 19 to 22%. That is an awfully hard group to overcome to continue to power higher. With that said, our market has continued to power higher with most of those financials moving downward. I look at Zions Bank, lost over 25% of its value. I look at Bank of America. It went up, but it came back down. We just haven't seen the follow through. JP Morgan got hit pretty good today. So, yes, the short answer is when financials tank, that will usually bring down the S&P 500. But because they had that little pop this year, it hasn't happened yet. There have been enough to offset the financials going into this year, and our really the growth is from that little pop of financials about 6 to 8 weeks ago. Back to David. Kevin, why are you so heavily vested in financials? Again, go back to last week's, David, and I thought you were there. If you weren't, I apologize. But again, it's my belief that if you increase interest rates, the banks make more money with fixed costs. If you have less regulation, the less regulation means the banks can start to do more lending without fear of a penalty. I also, getting back to the interest rates, eventually the interest rates are going to be high enough that it's not worth saving money at the Fed for a percentage and a half, and they can be making 4 to 6 to 8%. Well, and I guess that's a little high, when they can be making more money on loans and investments. I think the banks are a little gun shy, willing to take their 1.25% with the Fed rate, like a lot of people are willing to take, less than 1% for 10 years on a treasury. It just, what a shame. Let me put it that way, what a shame. Is the weakness of the financials evidence of uncertainty regarding regulatory system? Roy, it's not necessarily uncertainty regarding the regulatory system. The weakness in financials are the fact that they're still, in my opinion, overly regulated. Because they're overly regulated, it was a pain in the keister for me to get a loan. 722 score, credit score, money in the bank, money in a trading account, and for crying out loud, it was ridiculous. I went through a 7-8 month process, maybe 9 months, just to close on a refinancing of a home. So I don't know the weakness financials and certainly regarding regulatory reforms. It's the fact that they are so overregulated. In my opinion, even with someone that is a good credit-worthy individual, I think it's just a lot of red tape to get through to be able to even make a loan. And it was ridiculously tough. Good question, Roy. All right, any other questions? If they're not, guys, I'm going to tell you, Sorry, David. I almost got by without having to get that extra one in. So, Kevin, does this mean that maybe collar trading is not the best form of trading or investing at this time? Um, the short answer is collar trading is always a good way to invest. It's what lets you sleep at night. Now, a collar trade is involving two different positions, actually three different positions: stock ownership, long puts, and short calls. So, here we go. Is it okay just to have a stock by itself when you're collar trading? Of course. Is it okay just to have a short call when you're collar trading? Of course. Is it okay just to do a protective put strategy when you're collar trading? Of course. You are following the market for what it offers you and what it gives you. So yes, understand when you're collar trading, you can have a protective put strategy, a covered call strategy, the full collar trade, or just stock ownership by itself. It all comes down to the matter of risk you are willing to take at that point in time. So David, I collar trade because our market is overvalued. Yes, I still want to protect myself through earnings. I did pretty good on Visa, like 34 cents for our protection. I'm glad I had protection on Ford and on uh, on Disney, and I'm going to make as much as I can on the downside, convert it into new shares for when things come back. It's the ultimate waiting game. Yes, sometimes it sucks, but I don't. I would. How would I say this? I would hate to be foolish enough to live through another 2008 and watch 40 to 50% of my portfolio evaporate. That's 100% return, and I'm not willing to take that risk. David, good question. Abraham, is your faith in Ford still there? You know, I'm going to say yes, but I will also tell you that I'm not sure who they have right now in the CEO. It is also a better fit than Fields. So, so as long as they keep selling trucks and being a leader, even if it is less than last year, as long as they keep selling their trucks and they're leading in that category, 5% return to make a little bit of something on the way down, I would stick with Ford. It's a boring position. You know it can get up to 13. That's a $2 movement where it is today with a 5% dividend yield. Obviously, that dividend yield will go down, but right now they pay a 5%, what, 59, 58, 59 cents, 60 cents on their dividend paid quarterly. I like it. I'll just keep collecting that dividend. All right, guys. If there are any other questions, type them in now. If if you don't have any questions, email there, customer service at hurleyinvestments.com. You can also go to K Hurley, Kevin Hurley, K for Kevin, K Hurley at hurleyinvestments.com, and I'll get those questions answered for you later. Looks like nothing else is coming in. All right, guys. Hey, appreciate your time tonight. I hope this was helpful in knowing what was going on with your money and why. Have a wonderful week, and I look forward to talking to you next week. I will talk to you then. Good night, everyone. Have a great end of the week. Bye-bye.